Hello, this is Craig Larson with Larson Financial Advisors for the Market Minute on January 31st, 2014. So far, year to date, things are kind of getting interesting. The bond market has been rallying, the stock market is in corrective mode, and the emerging markets are in a pretty steep downturn right now. So the Fed met this week. They decided to do a little bit more tapering. You'd think that would be negative for bonds, but bonds continue to rally. More than likely what this means is that investors are concerned about a potentially brewing crisis in the emerging markets. And there's some currency issues right now with the Indian rupee, Argentinian peso, Turkish lira, and a new one to me was the Ukrainian hryvnia. I'd never heard about that. But those currencies are in some pretty steep free falls right now, and that has a tendency to shake things up. We saw something similar back in the late 90s when the Thailand baht collapsed, and it kind of shook things up in markets, and the U.S. stock market fairly quickly dropped about 13 to 15% during that time before resuming its long-term trend. So for right now, it looks like stocks are more likely just in a corrective mode. We haven't seen enough evidence to say that the bull market is over. Long-term trend lines are still intact, but things are weak and a little bit more choppy and volatile. So people tend to get a little bit more concerned. In the last week, we've had days in markets that are up 2% and days that are down 2%, and those are moves that tend to get people's attention. So what we do internally also for clients is we've got a mathematical algorithm that ranks and compares different things, and we give it a score. And the score ranges from 0 at the worst to 6 at the very best. So I thought I'd just run down the score list in some general markets so you could get an idea of how things are stacking up right now. The S&P 500 is scoring 3.21, which is okay. The Vanguard Small Company Growth Index, which indicates the more aggressive side of U.S. stocks, is scoring 5.5. The EFA, or Developed Markets International Index, the one that focuses more on Europe and Japan, is at 2.82, and the Emerging Markets Index, Fund EEM, is scoring 0.48. So we kind of warned about this weakness in emerging markets last year. It's just continuing to deteriorate as far as its strength. Then the bond market index is scoring 2.5. That's risen a bit over the last couple of weeks. Commodity index 0.28, and gold, which has been on the minds of many people, when is gold going to bottom? Right now the gold score is 0.5, so it remains really, really weak. It doesn't look like gold has put in a bottom yet. We might get some continued weakness there as well. So that's where things are stacking up. It's definitely an environment this year. We want to keep our eye on the ball. We'd be glad to do that for you. If you're not a client, you have some portfolio questions, please email or call me. We'd be glad to help you out on that. And in the meantime, thank you for tuning in and have a great week.